Hello, everyone, and welcome to our July monthly mortgage and market update. Nicole, I am so excited to see you. We have so much to talk about today.
I know. Where did half the year go already? Like that flew by.
I know. And that's what I want to talk to you about is that when we were doing this back in January, February, March, I remember pulling numbers, and I remember pulling numbers every month about how many single family homes in Denver are on the market under a million. And it was like 100, 130, 112, 124. And now last night I pulled numbers and we're close to 700. The inventory has gone up. The interest rates, obviously, as we all keep talking about, have gone up. So with that said, now the market's changing. The market is shifting as we all feel it. With that said, as of June, 20% of homes are only selling for over asking price. That's 1 in 5. I mean, back when we were talking in January, February, March, there was probably 5 out of 5. It was a pretty crazy market. And now the rate of multiple offers has also calmed down with nearly 53% fewer homes selling in competing offer situations. And I'm sure that your clients are feeling this shift too.
They absolutely are. I mean, affordability is constantly a conversation, and the earth is uneasy underneath my feet right now, right? It's like, am I going to continue to have a job? Am I still going to get that raise that I was expecting? Wait a minute, you just told me my rate was one thing on Thursday and now Monday it's something else because of the, I don't want to say erratic behavior of the Fed, but it's extreme. We've got a lot of fast moving bond markets, which is impacting our 30-year fixed. So all of that and more inventory. Some people are saying, well, with more inventory, will we see prices go down? Will we see a bubble burst? Should I wait? So it's so many conversations that are so critical are happening right now based on especially headlines that will decipher only part of the story.
Exactly. And then, like we said before in one of our previous webinars, that, a headline is only a headline. And those headlines are not written by real estate agents, mortgage lenders, people that are living and breathing in this business every day, like you and me. They're written by, a staff associate at a news corporation that has no idea what real estate is all about. But with that said, the earth is uneasy underneath our feet. But I want to touch on the fact that it's still okay for buyers to get into the market. The interest rates, yes, they've gone up a point or two here and there, but the prices have come down a little bit for some homes. Now, there are some homes still selling over asking, etc. But the general consensus, what we just talked about, buyers could maybe get a good deal right now. So it's still a good time for buyers to jump in, right?
I actually think that when things are uneasy and uncertain and you have fear is the absolute best time to buy for a lot of reasons. One is you're willing to take you're willing to make the move, right? That some other people might not be willing to do, but you're also willing to negotiate. And depending on that home, that seller might be willing to negotiate as well. You had quoted only 20% are going over asking. Now there's still plenty that are being sold at asking, but there are the ones that have been sitting on the market for more than a couple weekends that are dropping their price, or they're willing to negotiate, or they're willing to pay for a 2-1 buy down in your rate, or offer discount points so that you can buy your rate down permanently, or do some of the things that will help you get into that home at a lower price point on a monthly basis. This is exactly the season we've been waiting for. We've been waiting for some balance to re-enter. We don't have a balanced market. We still only have 1 month of inventory, but we've been waiting for a little more balance so that buyers actually had the ability to jump in again. They've been shut out for 2 years to cash and move up buyers and 800 credit score jumbo or conventional 40% down buyers. But now first time home buyers, VA buyers, FHA buyers, down payment assistance buyers now have the ability to negotiate, to have a closing on their terms, and to be able to find a home that they love, or use a renovation loan to make it the home that they love. Right now, we've been waiting for this for 2 years. Yes, interest rates have gone up. Yes, purchase prices have gone up. But right now, if we can get in and if you can negotiate, interest rates will go down again, and then you can refinance. You're not locked into that forever, but get yourself into the home, start building the wealth through principal reduction and appreciation. Now is the time.
Exactly. And just like we talked about, inventory's up. Buyers actually now have choices instead of that one home that goes on the market every weekend that fits their bill, that 20 other people are in line to go see. And then there's 20 offers on the table that they have to compete with. So that's why I'm really reaching out to buyers that maybe were sitting on the fence or maybe dropped out of the market in the last 6 to 12 months thinking, you know what, I'm just going to wait a little bit. And like you said, now is the time. Yes, like you said, interest rates have gone up a little bit here and there, but if we can get the house maybe at ask or under ask, and then maybe in a year or two refinance, why not? Then you can really start building equity and stop paying rent. And rent has an interest rate of, oh yeah, 100%. So there you go. Anything else going on in your world? Talk about actually that 2-1 buy down. A lot of buyers don't know what that means. Can you explain that?
It's kind of a slick little deal, and it really only works in markets like this, where as a buyer with interest rates going up, which maybe you're looking at a 5.5% interest rate as an example, with a 2-1 buy down, a seller can give you a discount to buy down that rate to 2% less. So it's the loan is actually on a 30-year fixed 5.5% interest rate, or whatever your interest rate is, but it acts like it's 2% less. So for the first year, you're going to make your mortgage payments as if that interest rate was 3.5%. Then year 2, you're going to make your mortgage payments as if that rate was 4.5%. And how you do that is the seller puts money into an escrow account from their proceeds to pay off a portion of your mortgage payment for you. That actually goes a long way. Now, I could take that same exact amount of money and I could buy down your rate permanently, but from 5.5, it might just drop your rate to say 5 or 4.99 versus getting you a really big discount for the first year and then the second year. And if rates do go down, that gives you the ability to refinance and then lock in while you've been taking advantage of that at a lower rate for the next 30 years. So it's playing this market where we think in the near future, we'll see lower interest rates and taking that money and just front loading it all to the front 2 years.
What a great idea. So sellers, listen to what Nicole's saying. Buyers, listen to what Nicole is saying, and then call Nicole. I will have her number down below. I will have my number down below too, if there are any homes that pique your interest that you want to go look at. And Nicole, I look forward to seeing you next month. Thank you so much for your time.
Absolutely. Bye-bye.
Bye-bye.